I'm DaJuan Johnson. Welcome to the Think Bigger Actors podcast, where I share with you different kinds of talks and coachings and conversations with actors and industry professionals on thinking bigger. I hope these conversations will help you on your path to success, because I believe success is an inside job that starts with your mindset and the thoughts you hold dominant in your mind. Change your thoughts and you change your world. Your path to thinking bigger begins now. Welcome to the Think Bigger Actors podcast. I'm your host, DaJuan Johnson, and we are diving into taxes today. Dun, dun, dun. At least I don't have a sound effect for that. But at least that is what I think you hear when I say taxes and money and all that stuff like that. I know talking about taxes and actor expenses and deductions and all that stuff, it isn't always sexy. It isn't always something that people want to talk about. I mean, I'm sure you rather hear from a showrunner or another actor to inspire you and stuff like that. But this is so important. It's literally something that needs to be talked about all the time. When I did my first Think Bigger Summit, that's the virtual summit that I do online. That's coming up, actually, by the way. That's coming up. When I did my very first one, I had Miyata Edoba on, and she talked about money, because I think we need to always be talking about money as actors. And I had her on every year I can have her on, and she'll come back. I want to have her on. But this episode, I brought on Ronnie Steadman, who's from Steadman and Associates, and who talks about all things, taxes and actors. He primarily focuses on, actors and the entertainment industry, but I just really had to have him come in and talk about what do we need to talk about with S-Corps and all that stuff. And so, yeah, here's the money episode, or tax episode, I should say. Get ready and buckle up for that one. I guess what I want to say is that I set up my S-Corps in 2018, April 26th to be exact. I had already been on Bosch for about 4 years at this point, and I really don't think I would have set it up if it were not for our former president. He made that, in my opinion, not great decision that, actors, we couldn't make those deductions and write off certain things anymore. And so I was really kind of frustrated about that. But what it did do, the positive in that, is it kind of forced my hand into creating a corporation. And so I was really, I guess I should say I've been making over like $100K at this point, as an actor with commercials and Bosch and all that stuff like that. So my yearly income was about that, but some years it would dip down to like 90, and some years it would go up. And so I just wasn't sure what to do. And I was scared to do the S-Corps because I don't know anything about that. I don't know anything about it. And to be completely honest, again, what I did do was, when I started that S-Corp, I ended up buying a book that was like S-Corps for Dummies. I did. And so I think you're going to really enjoy this actual episode, because it's near and dear to my heart, and I'm glad I could give this to you. And hopefully you will start, making sure your money isn't funny and making sure that you get in alignment with all of this. So, like I said, at the top, we've got Ronnie Steadman from Steadman Associates on today. And look, I really want to talk to him because we need to be up on our money, like I said 1,000 times already on this up. But I want to make sure we talked about the importance of financial and tax planning for actors. We talked about S-Corps and LLCs, essential bookkeeping, and the payroll compliance. That is important. And then we also talked about tax deductions specific for actors, and all the stuff we can and cannot deduct, like meals and holding on to your receipts stuff. I didn't know. I was so nervous when I was talking to him. It's a great episode. So please make sure you grab a pen or paper or your note, type it in your notes section of your phone, and get ready to take some notes. Get ready to ask some questions. Get ready to go to his website, Steadman Associates. It's really, really, really great. So, and don't forget to stick around at the end for the D12 shot, where I bring it all together. Ronnie Steadman, I got you in. How are you, sir?
I'm good, man. How are you?
I'm so excited today. We keep getting so many actors talking about money and talking about taxes. And it seems to be this thing that either actors are sticking their head in the dirt and not dealing with it, or they're
Yeah.
just running scared. There's no like, I'm gonna sit down and I'm gonna totally know everything about it. I'm like, what's up with that? Do you see a lot of that where actors are feeling like they don't know a lot about money and taxes and expense,
Oh
all
yeah.
that stuff?
Oh, absolutely. That's as common as it comes. I mean, honestly, like not even actors, like people. I mean, I mostly deal with actors and writers, people in the entertainment industry, but a lot of people don't know about money. But I think actors are a special breed, and I am one myself, so
Yes.
I understand it. But so I'm not throwing shade. But yeah, I mean, creatives specifically, you want to focus on the thing that's creative, and money and stuff is a lot of times the most intimidating or boring or whatever kind of thing that's out there. And so you're right. Some people stick their heads in the sand. I sometimes have people coming to me and they're like, I haven't done my taxes since 2018.
Wow.
So we need to do, we need to do like six of them or five of them, and then some people are just, they're just sort of panic. There's a sort of panic that comes
Mhm.
with just anything having to do with taxes and things like that. And so my job is to try to, calm that down. My job is to try to help people not to feel so scared and so panicked about that thing.
Yeah. I think we're going to talk about a little bit of this, but am I saying your last name right, Steadman? Is that right? I want to make sure. Okay.
That's right. That's right.
Everybody listening to this, Ronnie has a phenomenal website that I want to make sure that I'll link at the bottom of these in the show notes. But phenomenal website with downloadable packets and things like that for his clients to work with. And I love the way you say, "I bet I can answer all your questions after you read." I mean, your questions will get all answered after reading these packets and
Yeah,
stuff.
right.
Yeah, and I was like, sure enough. So I want to make sure we say that. But Ronnie, you have been said as a tax professional. Is that not like a CPA, or is it just encompasses everything when you say like tax professional? Or tell me a little bit about that, if you don't
Well,
mind.
tax professional is very specific to taxes. So I am an accountant. I'm not a CPA. I'm an
Okay.
accountant in the sense that I do bookkeeping, payroll, taxes. But I'm not. I'm what's called an EA. It's an enrolled agent, and
Okay.
that's a designation you get with the IRS
Mhm.
that allows you to if you have to go before the IRS, you're allowed to be represented by a lawyer, a CPA, or an EA.
Mhm.
And so it's a designation in the IRS. Like you have to take some courses and pass those standardized tests and things like that to get that.
Yeah.
But
Good.
it's not the same as a lot of times people will get me confused with, say, a financial advisor uh,
Yeah.
type of person, and
That's
I'm
a whole
not
nother
that.
podcast. That
That's a
financial
whole other
advisor.
thing. Yeah. Oh yeah. I send people. I go. I got a guy.
We're
I got a
not there
couple.
yet. I know that because there's a whole nother podcast about IRAs and
There you go. Yeah.
getting into all that. Yeah, yeah. It's a very,
It
very
sort of it sort of overlaps,
it does. It does.
but I'm usually dealing on my end. It's like what the financial advisor has set up for you. Then I
Mhm.
deal with that on the taxes as far as for IRAs and stuff like that.
Yeah. Well, I want to make sure I do a little disclaimer to say everything we're about to talk about. Yes, you are a EA, a tax professional, and you know what you're talking about. But please know that a lot of this is go talk to your own tax professional, or if you need a
Absolutely, yeah.
tax professional, make sure then you hire this guy. But don't like just take this podcast to be the end all be all. What we want to do here is make sure that we are offering some solutions, but like still at the end of the day, we want to make sure this isn't law here. We go back and check with your.
Yeah,
would,
absolutely,
would you
yeah.
say that just so I want to make sure?
Oh, 100% disclaimer. I love disclaimers because
Yeah.
a lot of times, especially when it comes, people also mistake me for a lawyer.
Hmm.
And when it gets into certain realms and stuff, like that is not my specialty. And then yeah, and like you said, overall, this is whatever we're saying here. See your person, talk to them, talk to me if you want, if you want to hire me, and you want to get individualized advice because you'll yeah, just don't I go with your disclaimer. i'm
Yes,
i'm
I want to
i'm
make
backing
sure.
that up. There we
Well,
go.
because I think what happens is everybody looks at this stuff and it's like I'm bringing this podcast because I got a lot of people that have been asking about these questions I got coming up,
Mhm.
right? And so,
Yeah,
but I also want to make sure you go back and hire a CPA or an EA or a tax professional of your own. I have found, and this is just me, maybe because people can call me lazy or suave, whatever. I needed to hire somebody when I became an S corp And when I became S Corp, sorry, I always pronounce the people S
Yeah.
Corp. I needed that extra person that knew more than I knew about this industry. So I want to make sure, this might be the foundation for it, but make sure that everybody is also, just seeking out a professional, even if it's just to pay for some time to get into your
Yeah,
mind,
right, right.
to get into your mind. So, there is the age old question that everybody's asking out there. There's an S corp, there's a C corp, there's LLC, sole proprietor, or just a regular W-2. I don't want to make you like gloss over like all of those, because everybody can do the due diligence and just like look that up as well. But I'm kind of just trying to think about like what's the best for actors, and at what part of their career have you seen those pieces go together? So I guess we kind of got to say what they are. Like what's
Right,
in
right,
it?
right. Well, it's kind of fun to just at least know to learn, because you have a corporation and you have an LLC. Those are the two ways that there are other types, like there's personal, there's all these other ones, but in terms of what an actor would be dealing with, is a corporation or an LLC. That's how you set it up with the Secretary of State. And then the S corporation, that is a IRS tax designation. So when you set up with the state, you're setting up either a corporate LLC. There is no S corporation. When you set up with the IRS, there is no S corporation until you make an election. So you can have an LLC or a corporation and make an S election to make it an S corporation, to have it be taxed as an S corporation. So either way, like I
And when you say election,
prefer
what do you mean? When you say election, are you
an
talking
S
about?
corp election. It's another form you got to fill out with the IRS. It's called a form 2553, and you fill that out, and you're telling the IRS, hey, I want to be taxed. I want this corporation or LLC to be taxed as an S corporation.
Cool.
Then the IRS sends you a one-page thing that says, from here on out, you're going to be taxed, or as of this date, you're going to be taxed as an S corporation. And so, whether it's an LLC or corporation, the IRS is going to look at that thing exactly the same way. You fill out the same tax form if it has the corporation, if it has the S corporation election.
Mhm.
If you don't make that election, then it is what you said earlier, a C corporation, if it's a corporation, or it's an LLC. Typically, what we're talking about in the realm, we're talking about a single member LLC.
Mhm.
So those are going to be taxed vastly differently. A corporation is going to be taxed as its own entity. Typically, an actor is not going to want to have that set up unless maybe in the future, if you're like a massive actor. And I really don't know. That's over my head. If you're a Tom Cruise or the
Brad
people that
Pitt
have
or Viola Davis. Yeah.
they have whole
Yeah.
cities working for them. I don't know how those people set it up, but on our level, typically you're going to want to be taxed as an S corp, and I typically would want to, if I'm setting you up, I would want to set you up a corporation and then have that taxed as an S corporation. Um, an LLC by itself, and this is good for me to say, because a lot of people think, oh, I'll get an LLC and I'm good. And it's like, well, you're not unless you make the S election. And an LLC by itself is just taxed. It's not. It's considered disregarded. It's called a disregarded entity by the IRS. So it's not even recognized by the IRS. So all you have is no tax, nothing that's going to affect your taxes, and you just have some franchise fees that you got to pay to California and things like that with just an LLC. So typically, if I would say a corporation, that you make an S corporation election.
Mhm.
Again, like you said, with the disclaimer, it's like always talk to your professional. They may have some different setup that you'd want to do, but that's how I do mine.
So what I heard you say in light terms, again, we're gonna disclaim this whole entire thing, you all. So because I want to make sure that everybody, we're putting this back into your hands, and I think for the reason you kind of said in the beginning, that artists, we just have been on that path of like, I just want to act, I don't want to think about money. But like once we understand that almost 90% of this business of this industry, our artistry, is about the business, things shift. We
Yeah.
really, really, really got to like keep track of our money, because if we're not, nobody else is. I promise you. I've seen it so many different times. But what I've heard here from you was lightly, and tell me if I heard it wrong, you would lean towards telling actors to get an S corp.
Mm, yeah.
Right. That's what we would start with. So that's even start.
Yeah.
So if you're listening to this, I would say start to do your research on an S corp. When I opened mine, which was just like I just did it on a wing and a prayer. And but I found a S corp for dummies, basically book,
Mm,
which was really because
mm.
I didn't
That's not
understand.
bad. That's a good idea. Yeah.
Yeah, and I just wanted to break it down so I could understand what this is and what I need to be doing. And so it's out there, everybody. And I'm sure I could probably find that. It was a digital download for us as well. So the best one for the actors, is there a financial limit or piece that actors should start making before they open an S corp, or is that all gone? Back in the day, 15 years ago, I don't know how old you are. We're not going to age ourselves. We're not going to do it. We're not going to
Yeah.
do
Right.
this. When I was
We're just
first
young
working,
pups.
we're just young. When I was first working on this, we would say like if you made more than $100,000 or $150,000, then you should get an S corp, right? But I think I'm not a tax guy at all, but I think I'm just laughing you off because I'm like, in my opinion, my tax opinion. But I think that's changed a little bit 4 or 5 years ago when we couldn't do write-offs anymore. When actor, I think that shifted, and so
The Tax Cuts
yeah,
and Jobs Act. Yes.
exactly.
Yeah.
And so I wanted to make sure, like, what did you think? What do you think about, should they be 100,000? Can it be 60,000? Can it be any thousand? That you're doing right now.
Yeah, it's a good question, and it's always, and you're right on. Before that law, I would have typically said about $150,000,
Mm. Hmm.
because you hit back then what was called the alternative minimum tax, and so
Hmm.
you
Makes
essentially the
sense.
same thing happened. You couldn't write anything off,
Right.
and then that the Trump tax law, or the Tax Cuts and Jobs Act, it took away the deductions, so it greatly lowered that threshold. Now I still would say you probably, it's hard to say exactly what that number is going to be because it's going to be different for everyone, and it might depend on if you're married or not and how much your spouse makes. But as a single person, I would say a general rule of thumb is going to be about $70,000.
Hmm. Hmm.
Um, the reason it's not a hard and fast answer, I would say, and what I'd say is like around that number is maybe where you start calling somebody, or if you're getting into that range, that's when you start asking the questions to your tax professional. And I'd say 70 is really like kind of a break even point. You still might not necessarily want to do it at 70, but if you're feeling positive and you're thinking like things are gonna go well and this 70 is gonna be pretty normal and I think it's just gonna go up from there, then that could be a good time to do it because you're probably going to break even on your corporation. Now, if you
What do you
just
mean
have
by
like
that? What do you mean by break
I
even?
mean, I'm sorry. Yeah, that's good. You're going to break even in terms of your fees that you're going to lay out in order to run the corporation versus the tax savings you're going to get from the deductions off of your, say, $70,000 in income. And what that means is like because the corporation is going to cost you money, that's why you don't necessarily want to just run out and get one because you got several fee, and we can go over the fee schedule at some point, but like you're going to have several fees that you have to deal with. You have corporate return, you have franchise tax fee, you have payroll, you have bookkeeping probably. So if your income's is somewhere like 40, $50,000, you're going to save some money by having a corp, but maybe not enough. You're going to save some money on taxes for that way, but maybe not enough to cover what you're spending on the
Yeah,
corporation fees. Um,
that's
and
good.
the reason I see 70 is because when you're at 70, let's say if you have an agent and a manager and all your money's from acting, then you're spending $14,000 on agents and managers.
Mhm.
And then you're going to have another $3 or $4,000 in deductions, maybe 5,000, depending if you're taking a lot of classes or coachings or whatever. So maybe you have 17, $18,000 where you're in at $70,000, you're going to be solidly in a 22% bracket. So if you take 22% of that $18,000 that you've now spent, that's about what's that? 30, that's about 4,000, a little less than $4,000 that you're saving in taxes. And that's a simple way to put it because there's actually some more savings in there that's a
Yeah,
little
yeah.
harder to explain. But in terms of like the big bulk of the savings is going to come from that, from your deductions and the tax bracket you're in. So running a corporation may cost you, anywhere like upwards of maybe $3,500. So now you're kind of in a break even point, and then anything over that. So then if you end up making $100,000 instead of 70, well, now you're really starting to get into some tax savings, because now you got probably $25,000 worth of deductions, and your tax savings are going to start going up and up and up as you make more money.
Yeah, it's very. I mean, thank you for breaking it down like that. I think it gets a little confusing,
Hmm.
right? Because you're saving money, but there's a couple other things we're going to make sure we talk about with payroll. You talked about bookkeeping, which I think is very important. But there's 850 bucks I have to send to California just to have that.
Right, just to
Right.
have the franchise. Yeah,
Just have the
yeah.
franchise there. There's all that little stuff. But so I'll just use me as an example. So where I was working on Bosch for 7 years and we 7 seasons and we had that going, but
Big
then
fan, by the way. I love
thank you.
Bosch. I
Thank
loved you on
you.
there. It was great. Yeah.
Appreciate that, brother. Appreciate
Uh,
that. But what happens though, and this I think is probably indicative of a lot of us artists out there, then it goes away. Right. And so
right.
while we're
Yeah.
looking for that next show, I might not be making over that six figures in
Right.
that.
Yeah.
I mean,
Yeah.
listen, in a perfect world where we didn't have to strike, I would be because of residuals. But you
Right. Yeah. 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 Exactly.
but we're not gonna go. That's another podcast,
uh,
like I said. But and so then I wonder, like, because you can't shut your corporation down. You can't shut it down, open it back up. It can't do that whole thing. You're
right.
just
Yeah.
in it now, and you're surfing
Right.
with it
Right.
for
I
that.
mean,
Okay.
you can shut it down, but like you also can, like, once you have it going, if you're having if you're having some lower years,
Yeah.
you probably want to keep it, because even if you're not breaking even, you're still probably not laying out too much more. You're still getting some savings out of it. So
Yeah.
let's say if it's costing you 3,500, but you might only be saving 2,700 or something. So it's not costing you that much more to have the corp, to just have it in place for the next thing. And then there's also the idea that, like in your case, for instance, I know you do coaching and
Mhm.
other things like that. So you can run other there's no problem. And again, this is another disclaimer: talk to your professional
Yes.
as far as what you can run through there. But it you're not necessarily limited to just your acting,
Mhm.
that you can push through the corp.
Yeah, my acting, just so everybody, again, this is mine and you talk to your people, but this is under my corporation, it's Think Bigger Productions. That's the acting part. And my coaching business is a DBA as Think Bigger Coaching under there. So it is,
Yeah, right.
we have both of those things under
So they're
there.
under there, yeah.
Yeah, it's under there. And it also, which one thing I want to pivot to a little bit is, I run payroll and stuff out of that, you know,
Right, right.
um, I think a little while back, it was rumored. We're just going to call it rumored that the state of
Okay.
California, Employment Development Department could stop recognizing loan outs, and
Yeah,
everybody
yeah.
was all up in a roar. And I told everybody just to calm down. I was like, just
Yeah,
calm
right.
down. Let's see how this shakes out. But what I was also saying is, look, I'm not a tax professional at all, but from the friends, I'm not going to call anybody out, from the people I know, a lot of y'all are just getting this money from studios and you're not running payroll. So for example, you're doing like a $5,000 check that comes to your corporation as $5,000 and you're like out spending $5,000. Well,
Right,
in my mind, because I had to get two businesses that were going on under me, we have
yeah.
to, like, that comes in and that has to go into its own personal savings account or checking account, and we have to run payroll on that where we're
Yeah. Hmm.
sending, and so I think a lot of people, well, first of all, why do you think what's going on with this possibly California stop recognizing loan outs, and why is it payroll?
Yeah, right.
That's my thought on it.
So I'll say, like, that was a very panic stricken weekend,
Yeah.
and I think it was such a big deal because they sent out the letter. Cast and crew sent out a letter saying that EDD was coming down on them, telling
Yeah.
them not to recognize the loan outs, and then cast and crew said that EDD said this was going to be across the board. So I'm not sure if any of the other ones came out. Maybe Entertainment Partners did, but anyway, those are the big dogs of payroll,
Yeah.
and I don't 100% know why. That there was a lot of speculation as to why California did that. My suspicion is it has something to do with unemployment.
Ah.
Some people, knowingly or not knowingly, will game the unemployment system sometimes. Because when you have a corporation, you still are able to collect unemployment, but you have to have run payroll. So this
Right.
kind of all ties in. You have to have run payroll, and then when you're bringing in money under the corporation, even though you might not be running payroll frequently, maybe you're only running it once a year or twice a year, something like that. Um, you can't continue to collect unemployment in weeks where money's coming into your S corporation. So if you get a $5,000 check to your corporation, you can't take unemployment in that same week. Now, I don't know if that's why it was happening, but I know that I had seen more and more of the what they call employer audits,
Mm.
where they're sending an employer audit is not as scary as like an IRS tax audit kind of thing, but it's where they're sending to the corporation. They're saying we want to know when the money came in,
Hmm.
and then they cross-reference that to when the employee like took unemployment. And then if those are like overlapping, then they go, well, you shouldn't have taken it this week, and they ask for the money back. The other thing that happens is that sometimes with it's timing of when the money comes in, as far as when the unemployment, because you know how unemployment works on these like I forget what it's called, like a base period, that
Yeah.
they
Yeah.
say like a base period of a certain year. And so there's a timing of when the money comes in and what type of money, if it's residual money versus like principal money
Oh,
kind of
right.
thing. And so sometimes that can be an issue. So I'm not, I mean, I'm kind of getting in the weeds here, but all of that to say, fortunately, the unions like were on that because they were putting in calls. I mean, I think that I saw that on like a Thursday maybe, and then and then by Monday they had retracted it for the most part.
Yeah.
The EDD
So
had
quick.
said, "Hey, you know,
Yeah.
we're it's all good. Like we're not gonna do." And I was still afraid that I might see a lot of people get like audited
Yeah.
or questions, and I haven't really seen that. So thank goodness. So fingers crossed. Like we're not gonna see much more of that.
Well,
That's my hope.
I think the major thing, even if it's not about what we think it's about, I think that's a great conversation for people to have. If you have an S corp
Mhm.
or an LLC,
Right, right.
understand is making sure that you know the unemployment benefits, or how does that work for you. That's what
Yeah,
I took
right.
out of that. I took out of that.
Yeah, yeah.
That what you just said, and also, if you do not run payroll, you need to figure out how to run payroll. It's a big thing. It's a big part of the
Yeah, big
corporation.
part. It's law.
It's law.
So it's law. And if you think about it, it makes sense because we've all heard the term loan out, right? And I for years I was like, what the heck is a loan out before I was doing this stuff? And what does that mean, loan out, loan out? And what it means is that you're being loaned the employers, the studios and all that, they have employer laws that they have to follow. They can't just pay you as like a contractor. When you come on set, they're controlling your day. They're telling you when to show up. They're giving you call times. They're giving you lunch. They're like telling you when to go home. So they have to pay you as an employee in that scenario. And what the difference between that and a contractor is, a contractor, I'm sure we've all done contract work where
Right.
you just do a job and you're getting paid $1,000 and they give you $1,000 and that's it. Um, Instead, it's like they give you $1,000 and you don't see $1,000 because you only see 700 or maybe 600 after your agent gets a piece, because they've taken that other 300 and they've sent it off to the different to the different places, the
Right.
IRS, the Social Security, Medicare, all that kind of stuff. So that's the difference. And then they also have to pay in unemployment and all this kind of stuff. So you're being loaned, you're by having an S corporation, you're now working for your corporation as an employee,
Yep.
and your corporation is loaning you out to to
To
whoever, Warner Brothers
Netflix
or
or
Disney or
to, yeah.
Netflix,
Mhm.
whoever. And so they're loaning you out to them. So that means the Netflix or whoever is operating under the assumption that you're looking over your shoulder, but it's like get that straight going moving
Get it squared
forward.
away. Get it
Get it
squared away.
squared away moving
Yeah.
forward. Because you don't want to be, if the IRS starts, if they ever get a piece of it and they audit you, then they can go back pretty much as far as they want and look at stuff, once they've like caught you in a particular year doing that, because they're going to be like, because that's the kind of thing that I don't know that it may have, what's the word when you can only go so far back, I'm forgetting the word. Anyway, it may have that you can only go back 3 or 4 years, but I think with something like that, you can keep going back. So
You can
you
go
just
back.
don't want to end up like
Yeah.
10 years down the road and they're going to ask you for 10 years worth of Social Security and
Yeah.
Medicare and turn you into payroll.
Turn into payroll. And one of the other things that I took with one of my CPAs that said to me is make sure you're taking a reasonable salary too. From
Mhm.
that instead of like I
Yeah,
only made $50, even though
right.
you know
It's true.
it's
Yeah, if you're
reasonable.
making and reasonable, that's that's something to work out with your
Yeah,
professional.
that'll work.
But reasonable is like, what I can tell you is not reasonable typically is if you go do a series and you make 500 grand in a year and your payroll is 30 grand,
Mhm.
that's not going to be reasonable in the IRS's, term. It's going to need to be a much bigger number than
Yeah.
that.
Yeah. That's something to work on. So, all right, as we close the S corps, because I know they can be S corps can be or corporations themselves can be a little bit daunting for people. What would you say would be? I'm going to put you on the spot. Like the number one thing that if I could walk away with actors knowing this about starting a corporation or about a corporation, what would that be? So they are like, okay, I feel good to even start, or even maybe not now. Just what would a nugget be for that?
A nugget. That's a good question. I'd say don't. Probably don't jump in. Get help. That's probably the biggest nugget. I would say like don't listen to your friends. Um, even
unless
if they
unless they
have
have
a
a
good.
podcast, unless they have a
Yes,
podcast.
exactly. You can listen to your friends if they have a podcast and they're talking to a professional. Then there you go. But talk to a professional before you jump in,
Yeah.
because I've seen so much of a mess of people that, especially when that law first passed.
Hmm.
There was some advice out there. People were just saying, "Go get an S corp, go get an S corp," and so a lot of people started them that just really shouldn't have, and then you end up with a lot of fees and you end up with a mess.
Yeah.
And
Yeah.
so, just talk to someone first, even if you have to pay a consulting fee. It's going to be worth the to talk to someone and figure out, do I really want to do this?
I would just add to that if I may answer this question myself. I was just thinking about what I would say to any of my friends. If you start an S corp on top after you talk to somebody, make sure that you have freaking great bookkeeping. Like it is like
Yeah, yeah,
it'll knock it out of the park with you. My first couple years as an S corp, I was a little bit messy with what was coaching money and what was acting money, and it was like because at the end of the day, it all goes into the same pot. That you know what I
mhm.
mean, but the different streams. I didn't know what was making what money, and
Right,
and
yeah, yeah,
it was a really bad mess. And I didn't realize that my coaching business, and I've talked about this publicly before, everybody, but my coaching business was so far in the negative. Like I was
okay,
making
yeah,
so far in the negative, but I didn't know because they had the same checking account and they had the same,
yeah,
like line items. It was all there. We could see it. And
right,
so I always thought I was operating in a positive, but that was because I was getting money from acting and residuals and everything going in.
right,
So
right,
now
right,
that
right.
we've separated those two worlds and they have their own P&Ls, you know what I mean?
Yeah.
Then it's
No, that makes a lot of sense. Yeah. Keeping track of everything is so, and that, because that's the other, and maybe another little nugget is that if you do hit that big, if you hit that big show, don't spend all the money.
oh
Like,
God.
talk, like, like even if you, once you get your S corp, then I've seen this happen many times that, because sometimes you don't, you might only do payroll at the end of the year or something like that.
Yep, yep.
And I've gotten to payroll at the end of the year where people didn't have any money
Yeah.
left to do payroll. And you're like, well, you just made, hundreds of thousands of dollars and we need, because you don't, you're, an S corp allows you to pay a whole lot less in taxes,
Mhm.
but it doesn't make taxes go away.
Yeah, yeah, yeah.
So, and if you have a substantial salary, so like if let's say if you made let's say if you made 800 grand and you spent 200, and so you still have to pay taxes on 600 grand, right?
Hmm.
Well, that taxes on 600 grand is going to be probably at least 200 grand.
Yeah. Hmm.
So you got to have that 200 grand, and hopefully if you've made that much money you didn't spend it all, but like hopefully you still have 200 grand, but you don't want to just have 200 grand left over. Like you probably want some more money at the end of the year. So don't go buying cars, and don't go getting a new apartment, things like that, until maybe you've gotten your year behind you, and then you can settle and see where you're at. Or
I
or
bought
if
a
you're good at
house. I
a few
bought a
years.
house. I'm not listening to you, Ronnie. I bought a house. You can't hold me down. No, no. I'll be broke, but I'll be in my house.
There you go. That's right. That actually is probably a better thing. That's a much better idea than buying a car.
Been buying a car. No, no. I figured I needed something to show that. But I agree with you that like it's interesting if you're not taking a quarterly salary, or one of the things that my bookkeeper got me on. He's like, I would just love to see if you could do $2,000 a month, just do $2,000 a month. So by the time we got to the end of the year, we could figure out where you needed to go.
Right.
And
Yeah.
then but then my CPA was like, no, let's just take it at the end of the year. We'll just do like a
Yeah.
40,000. And I was like, what? I will say this also, everybody, that like there are some also cool benefits of having an S corp. There's some things that being having a pass through corporation or pass through, like there's a lot of stuff that I do get to write off in different ways that I didn't know that are actually legal and beneficial. I want to be clear on that. Just stuff that I'm like really really great. But as we start to talk about expenses, boy, do I have a question for you because
All right.
listen, I mean, I want to update, everybody on these write-off categories because, we've heard lately that items like gym, hair, appointment, nails, skincare are considered ordinary upkeep expenses, right? Ordinary, I guess that's
Yeah.
the word,
Right.
ordinary, and should never be paid for by business accounts or written off. And it's so interesting, because I want to make sure that's correct information, and, if not, how to categorize that in your opinion, because I'm like, Beyonce's not using all this skincare and like paying for it, or or Mark, not that I don't know any of these people, everybody, I'm just saying using them, but like Mark Wahlberg is going to the gym and I'm sure he's not paying for it, like, you know what I mean, like how are they getting away with this, and the skincare stuff and whatever, and we're not. Anyway, that's a big question for you. I think you
Yeah.
can
Right.
handle it. You go, Ronnie.
I don't know what I wouldn't have any idea what those
Or you
um
don't have a direct line to Beyonce? You don't?
I don't have, yeah, I haven't talked to her
That's weird.
accountant lately.
Super weird, buddy. I thought your site said.
Like, do you write off all that makeup?
Yeah.
Uh, uh, what I can say is that like there may be tricks, there may be certain tricks that their accountants use and things like that, or maybe they just write it off and see what happens. Um, what I know is that there's what's called the MSSP that the IRS has. It's called the Market Segment Specialization Paper or something. I can't remember what the P means. It's where when the law is not as clear in a, because every industry gets so like,
Yeah.
it's too sporadic or too micro to try to get into it. They actually have a guidelines, and the MSSP is the guideline for actors. And it's there is an MSSP for performers, and in that's where it's very clear that like makeup, hair, nails, gym, all those things are not something you can write off. Now, the exception would be that you can write some of those things off if they can be directly attributed to the work, if they're required by your work, in the sense that like, if you're about to get some headshots, then you go get your nails done and your hair done a certain way, and you get your whatever, whatever those like grooming kind of things are for your headshots. Or if you're on a set and they require a certain like hairstyle,
Well, like I have to
or
keep this. Like I have to keep
yeah,
this for the role I'm up. I'm
so
out that
yeah,
I'm
that
the
you're doing
show I'm
now.
up, or else I would shave this off. You know what I mean?
Yeah,
Normally, right? But this is I have to not. I mean, this is how they booked me. Does that make
right,
sense? So
right,
maybe I could say that my upkeep with my beard
exactly.
would okay. Okay.
So
Just so make sure.
there's certain things that you could that you and this is where it gets in nuance. So it's like, well, what's been explicitly required and what's sort of implicitly required for the job. Like in that, like in your what you're talking about. Maybe they haven't explicitly said you have to have the beard, but maybe it's pretty implicit because you've had it the whole time. And
Yeah.
maybe they have explicitly said it. So it's like, or maybe it's written in the script that the guy has a beard. So there's like um there are some nuances within that. So it's kind of working that out with your tax professional or whatever as to where that line is going to be. And let's say if you have like your stage makeup, like let's you
Yeah.
have a makeup set that you use just for going to auditions and just for, then I would say that's, yeah, you can write that off. And it's just you can't necessarily write off the regular upkeep, your haircut, your nails, things like that. But if you're getting nails for a specific reason, for a role or something like that, again, that's like where it gets into nuance.
Yeah. Yeah.
To give them the benefit, to give the IRS a little bit of leeway on that, it kind of makes sense in the sense that, like, if you're saying like I got to look good for my job as an actor, most anyone can say that because there's a certain upper hand you get by looking better in general in society. You could be working on Wall Street, or you could be working, you say, well, I gotta have Armani suits for my Wall Street job. So that's why the IRS kind of gives that sort of specific line. And I would say, like with gym, the only people that I think could probably take the gym, it would be stunt people, because
Mm.
it's gonna be more. Even then, I don't know if the IRS in an audit would be like, oh, that's fine. I think because at that point it's like, because some of those things are going to come down to, like, you're talking to the auditor, and an auditor is a person, and they're going to be like, oh yeah, I see what you're saying. That makes sense. Like, guy's got to have a gym because he's going to kill himself if he's not staying in good shape. And but for like a non-stunt person, they go, well, there's plenty of people that are not in good shape that are making a lot of money in this business.
Yeah.
Because they're
So
worried, now they're selling a different thing. So it's like, then you go, well, I'm selling this certain thing, so I got to stay in shape. So that's where it's like, there's a lot of like,
gray. There's a little bit of gray there.
a lot of gray there. Yeah.
Yeah. One of the things, okay, so what would you say is a good barometer to just for us to even start with that? So it's like if it's everyday use, like I know, I think somebody had said at some point, like, DaJuan, yeah, you went out and bought that shirt, so it looks good for your audition. But if you wear that shirt in everyday life, that's not
Yeah.
a I might be missaying that, however,
No, I say that exact thing. I say that exact thing. Because otherwise, I would buy all my shirts for auditions.
I mean, I
But
do.
if
I
it,
do.
yeah, right. But if it's if the IRS term is if it's general streetwear, um, I would say that you could. So in other words, they would say, even if you just buy that shirt for auditions because it's general streetwear, it's not deductible. But I would say if you only wear that shirt for auditions, then it's deductible. Like if you put it in your closet and it's over here, and these are my audition shirts, and and for whatever reason, like that t-shirt that you wear is like for auditions, or that jacket you got on is like for auditions, I would say you can write that off.
Yeah.
You just have to make that case that, like, this is for my, like, athleisure wear look, or my whatever, and I do not wear this otherwise. Ideally, what they would want you to say is that it's a clown costume, or it's or
A
it's
nurse outfit or
a
something
nurse.
like
Yeah,
that. Yeah, yeah.
exactly, that
Doctor.
kind.
Okay. Yeah.
Right.
That's
But
very
if you're wearing if you're buying a dress for a premiere, and that's the only time you're
Oh
ever going to
yeah.
wear it, I mean, to me, that's a costume, right? So I don't know,
Oh,
because
so
you're
like
not
Rent the
going to,
Runway. Like
yeah, rent the runway. Yeah, you're not going
Mm.
to wear that it's not a normal, it's a costume at that point. So,
Yeah.
but it's like, but those are again kind of gray kind of things.
I like gray. We need to know about this gray. We need
Gray, yes, exactly.
we need to know about this gray, because I think, we get in there, we think we can write off everything. Like, for example, I have self tapes, they're 100% write offable, right? When I do my self tapes, and I also have behind the scenes going as well. So I get that for marketing for my coaching business. So I'm hitting it at both angles
Yeah,
of the
right.
self tapes, and then I'm, marketing and putting it up there as well. So it's I think, like you're saying, if you can really justify, what it is, instead of not like this next thing, which is how do you justify business meals? Because if you all are watching this on YouTube, you got to see Ronnie smile. It's like, oh, we're gonna do this one. We're gonna talk about business meals. Well, because I understand that, you're meeting with a client, or you're meeting with your agents or reps or something like
Mm.
that, to discuss, business transactions. Is that the only, situation where your meals can be expensed? And I also want to just like stop for a second and say, again, on Ronnie's website, you have this beautiful thing there where you, like, if it's, please let me know if I'm saying it wrong, to let me know too. If it's over $75, keep the receipt and you have a place to fill out. And then if it's under $75, you have a place to just fill out, where it seems like we don't have to keep the receipt. So I guess that's a two-part question. What are business meals considered? And then, like, what's the pricing and all that stuff like that is the second part of that.
Yeah, so you're right. I'm impressed that you read through all that. So yeah,
What do you mean? I couldn't have you on here. I could, like, listen, I've been begging you to get on. I couldn't be on, like, so what do you what do you what do you do, Ronnie?
That's good. That's very, because that's all in fine print in there. Yeah, and that's exactly right. If it's under $75, all you basically need is a log showing that you did it. But it's best to have the receipts if you can keep them all, or if you can dig them up, or maybe to have a credit card statement to cross reference or something like that. But you don't necessarily need them, as long as you have, and like in that packet, you see it's like you're having to define what it is. Like, why did you who it is, where it was, what the date was, why did you get together, what was the business purpose? Those are all the standards you got to meet for it to be a business meal. And the only other meals, and that's all up to you to say. Like, what I'd say is, like, the nuance of the law is hey, if I'm getting together with my best friend, who happens to be a writer, and we get together and we're eating or drinking, and all we do is talk about the business. Technically, if we got together just to, like, just to get together, then that's not a business meal. But if I said, "Hey man, let's get together and we're gonna talk business tonight," and then we get there and we talk some business, but we're also having a good time, that's actually technically a business meal. So it's like, what was the intention of getting together?
Yeah.
So you just got to make sure your intentions are right. You got to understand the rules in those kind of scenarios, and make sure that, like, that your reason for getting together was that. It doesn't mean that if you're getting together with someone, that you can't also do other things in that business meal, like, and catch up and all those kind of things. But the idea is that, like, you got together for that reason.
Hmm. I told you I wasn't gonna make anything like hard and fast on you, but this is a serious gotcha question. I need to know, and I need you to go down on swearing on this, because
Okay.
I need an answer for this, and I think my tribe wants to know the answer to this too.
All right.
How damn long do we have to keep receipts? Like, I mean, like, is
Uh,
it, well, I need, no, don't try to, don't turn your camera off. I just need
good
to
luck.
know, man, because I'm like, I feel like I'm a little type A, everybody listens to the podcast knows that. And I have, like, bins of receipts, and, like, you can go back, and I saw one that was like 2017, and I'm like, do we need this? Like, how far do we need to go back anymore? Or it feels like there's, like, this looming, you could get audited. And I don't really mean to put you on the spot there, but maybe you have an
That's
answer.
fine. I get
Yeah.
asked that. I like the way you asked the question, though. It's more entertaining. So what the rule is typically, the IRS is 3 years, like, from the file date. That they're not there. That is their limit to challenge your deductions. That's from the file date. So not, so if for 2023 your file date was April 15th, 2024, so you'd have to keep it till April 15th, 2027
Right.
to be
Right.
safe.
So
I
everything in
always
2020 right now is a wash. I'm good.
Yeah, exactly. That's
Yeah.
good. Yeah, exactly. 2020 would be, you
Or
you
20.
could probably get rid of it
Probably
No, you're right.
19,
Yeah,
probably 2019 because 2020 we filed in 2021, right? And
right.
then that would
So
be
yeah,
that.
no, as long as you weren't extended or anything,
Yeah,
your 2020 taxes you could, or
Ronnie,
by
I told you
October.
I'm type A. There's no
There you
extensions
go.
here,
Yeah,
buddy. I'm,
that's right.
I'm type A. Come on.
Like this is not happening. No
This
extent.
is not.
So yeah, now I do typically say keep things at least like 5 years because you
Okay.
just never know with the IRS. But your chances after 3 years of getting audited for that year are extremely low.
Mhm.
Um, and it probably would only be if they caught you in a following year being outrageous with your deductions,
Yeah.
if that makes sense,
Yeah.
or if they caught you in a following year not reporting income, because not reporting income is the bigger no-no
Mhm.
than taking too big of it. If you take a deduction and you have a good reason for it, even though it wasn't the right thing to do, because sometimes because of the gray, and they go, you can't count that shirt, and you go, okay, but I was only using it for auditions, and they go, well, you can't count that. Well, they're going to do is change your numbers a little bit and say you owe us some money. You shouldn't
Mhm.
have written that off. If they catch you not reporting income, then that's where you've actually committed like a crime in a sense,
Mhm.
like in their
Mhm.
eyes. Now, if it's a few $100s, they're probably not. It's not going to be a huge. Like they'll just correct it because maybe you got some money and you forgot about it. Whatever, there's different reasons why you might not report something. But if you're hiding thousands and thousands of dollars, this is what sends people to jail. This is what Wesley Snipes went to jail because he wasn't filing. Well, he just wasn't filing taxes. But so that's when they get you is when you're hiding income. So I have a long story to say. I typically say keep things for 5 years just to be safe. As long as
Yeah.
you got the space, your chances of getting audited after three, your chances of getting audited in general are pretty low, are like very low. But it does happen, so you want to be ready for it if it happens.
Yeah.
So I just keep five, be safe, keep five, and you should be good.
Good to know. I will get
Long
rid of.
answer to your question.
No, great answer. I was going to say I'll get to know. I'll get rid of 2017 and beyond in the back. From there, I guess I can let it
There
go.
you go. Yeah.
Um, I'm going to ask you. Nobody. It's just you and me. It's just you and me. No, you can
Yeah.
just tell me the answer to this. I'm wondering, is there anything that you can think of, from your professional experience that actors should be writing off, but typically they're not writing off? Is there something like we don't know that like, oh, it's like, ooh, you could be writing off Netflix, or ooh, you could be, writing off a little bit of your cable bill. This is stuff
Yeah.
I
Right.
know because I do. Like, is there something that
Right.
we're missing that maybe you're like, did you know that?
I mean, you're probably not missing it, unless you saw something in my like packet but I'm sure you already
Yeah,
have
since we're
those kind
talking about your packet,
of.
like this 11-page packet here, y'all.
That's right. That's right. Um, I would say the typical things that people miss are going to be like that they can write off a portion of their cable or their Netflix that they can write. Sometimes they don't think about the fact they can write off a portion of their cell phone,
Mhm.
and usually a decent size portion because a lot of times you're using it mostly for business.
Yeah.
And then same with internet. A lot of times you're using that mostly for business. So a lot of times it is those dual use kind of things, those things that are both business and personal that people just go, oh, well, my phone's a personal, I can't write that off because I
Yeah.
use it. And so I think those are probably the most common ones. I'm trying to think of anything else that,
Can you write off a portion of your, like, I mean, I don't do this with this CPA, but I was thinking a couple CPAs ago that I wrote off a portion of my home office. Like they're like, there's this little piece of, let's say
right? Yeah.
three by three or something like that. They're like, that's
Yeah.
dedicated. But I felt like it got complicated. It's like, well, then are you like, like what happens there where
Yeah.
people want to write that
Yeah.
off?
Home office is something you can write off. It's, I was hesitant to do it for a long time back in the day because it felt like it was an audit trigger.
Yeah.
But if you have a space that's dedicated and it's considered like what the IRS is exclusive, it's exclusively used, then you have a right to write that off, and it's just as a percentage of your overall place. So if you rent, if your rent is 2 grand a month and 20% of your, and you measure out the space and it takes up 20% of your apartment, then you can take what is that, $400, $400
Mhm.
of a deduction.
Wow.
That's a
Okay.
$400 like home office deduction. So yeah, there's not, but that's the thing, is it has to be exclusive. So you can't just be like, well, I do my self tapes in the living room.
Yeah.
And so you set up your thing, then you do your self tape, and then you break it all back down and put your couch back. Then it's like, well, that's not exclusive. That space is not exclusive.
Right.
It has to be a space that's like only used for that. So usually it's an extra bedroom.
Yeah.
Sometimes it's people have carved out if they're living in a small studio or something, maybe they have carved out a place to do self tapes and they just kind of keep it standing. So that's all they're using it for. Then you're within rights to do that.
Yeah. I have a whole bedroom like for because I
Perfect.
coach and do stuff in that
Yeah.
space.
Yeah.
And so it's a
Yeah.
definite home office area for that. I'm at the end of my questions for you because I
Yeah.
feel like I drilled you. I feel like I feel like you work well under pressure. These numbers
That's
didn't bother you.
good.
Everything else is personal. You know what I mean?
Yeah, right,
So,
right.
Ronnie, I think to be honest, like, thank goodness you're out there. It's very intriguing to me that you are an actor, so you get it, and you are a tax professional, so you get it on both of those. It's
Right.
sometimes trying to go to somebody who doesn't understand our industry. I felt like that was a little bit rough for me. I'm not saying anybody leave your people, but I'm saying once I got with somebody who does both of those, understood the entertainment industry and how we make money, how money comes in lump sums and sometimes it doesn't come in. I think that was really great. So I just want to just say, here's your flowers, buddy. Thank you so much for
Oh, thanks, man. I appreciate it. You
what
made this fun, man. It was great.
what you're doing. Yes. And I will make sure that I link everything, everybody you're listening to. We're going to link everything below this. So if you have questions, not for free, this dude doesn't work for free. So like,
Right.
I
got a family. I got time.
Yes, but like reach out. And I will say again, there was like 5 or 6 different packets on his thing with S Corp, with C Corps, with, for actor worksheets and stuff like that. That was all on his website for free. And I think that is just a beautiful place to go, even just tinker around for that. I mean, would you say, right?
Yeah, absolutely. Yeah.
And they're free, y'all. They're
free.
That's
free there.
Thank you so much, Ronnie, for being here. I
man.
appreciate you so much.
You got it, man. That's great.
Oh my gosh. Listen, it was a little bit sexy. It was a little bit sexy because I came from this guy who I used to call myself an accidental entrepreneur. That's what I used to call myself. And some people make some things like actrepreneur or business. I don't know that I ever really wanted to own my own business. And so just the way I was raised, I don't say that's a great thing, but I'm being real honest with you. I'm always honest with you on my podcast. Nobody, my mom or my dad weren't like, DaJuan, you're going to grow up and you're going to start your own business and you're going to worry about money. I was always raised that I was going to grow up and I was going to work for a corporation, get a good 401k and, put all that money aside, I don't know, and retire, yada, yada, yada. So becoming an entrepreneur inside of my own Think Bigger coaching business, and as an actor, the actrepreneur side of that was a little bit scary. So I just want to make sure that I highlight a couple things in this D12 shot. So I just want to say, if you remember one thing from today and the great talk we just had with Ronnie, is don't jump in alone. Get help. I mean, this could really go for a lot of things inside of our industry, but right now we're just talking about taxes. Don't jump in alone. Get help. Ronnie broke it down perfectly. Too many of us rush to set up business structures, make money decisions, or even skip those boring parts of our careers thinking we can just wing it. But having someone who understands both the creative world and the tax world is invaluable. Oh gosh, it's so invaluable. It's not just about keeping up with the game. It's about setting yourself up for success. For success. I want to repeat that part again. It's not about just winging it. It's about setting yourself up for success. And I got to tell you, when I started really getting clear on my money, how much is coming in, how much is going out. I know it's so weird with actors, the way we're non-traditional earners, and so we might get this big lump sum. Like I made $30,000 in 3 months, actually 2 months, $30,000 in 2 months as an actor, and then I might go for another 6 months without making $30,000 or not making that much, and so it's really, really, really can be scary. But it's important to get with somebody that understands the creative world and the tax world. It is so important. So reach out, consult, and make sure you're building on solid ground. Your future self will thank you. I don't know why I didn't start a business. Well, I do know why. That's not true. I just told you why. But I wish I had started a little bit earlier and with all of this, with all money and all this stuff like that. But I'm not gonna beat myself up, because you can't beat yourself up for something you didn't know. That's really important. That's the D12 shot for me. Thank you, Ronnie Steadman, for coming on. Again, I'll just say, don't go at it alone. Find support, find guidance, and protect your dream that you're working so hard to build on. Protect your dream. Remember, don't quit. Don't get out of line. Borrow my faith in you. I want you to know that I'm rooting so hard for you. I want you to hold the vision and not the circumstance in this career right now. Your career, your life, all that stuff, your vision is bigger than just this moment. I love you so big, and I'll keep doing these podcasts as long as you'll keep listening. Don't forget to hit me up on the Instagram at Think Bigger Coaching and let me know how you like this episode. I look forward to talking to you real soon. Oh, I'm back. I've been doing these mini-sodes and everything every week. So you got a podcast and you got a podcast and a mini-sode for me every week. How is that feeling to you? How's that going? Are we enjoying the mini-sodes? Oh my goodness. I'll see you next week.